Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 10th of January, comes to you from Singapore. And I'm busy seeing clients here, but managed to just take some time out to record this. So we are just seeing the dollar index pulling back slightly. We're still in this bearish territory. Found a little bit of resistance here on the 60-minute cloud. No real big downside targets to speak of at the moment, so we do still expect this dollar strength to kick back in at some point. But at the moment, we're seeing the dollar just coming off a little bit, and that is to the euro's advantage. And we're just seeing the euro going through a little bit of recovery here. Interestingly, we're breaking the highs we saw last week, just nudging above those at the moment. We've got these targets to 107, 109. So the euro might have a little bit of a run before it falls away again. So we do still have a lot of bearish downside targets. So it's way too early to call the bottom or any recovery on the euro. And I think most concerning of all is that we're just hanging around these levels. We're not really rebounding very strongly. So that's a pretty key aspect in terms of the currency. Looking at the Japanese yen, we're seeing the dollar just falling away here as well. So that weakness that we're just seeing short term in the dollar is showing through. The one place where it's the dollar isn't weak is against sterling. So this is really highlighting renewed sterling weakness over the last few days, and really nudging these lows now, 121.50. We've got a massive downside thrust target here. It's about 2.5 cents, that downside thrust target. So that implies a further 5 cents downside. So taking us well below the 120s into the sort of mid-teens, like 116, 117 area. We do have downside targets in the long and medium term, and we've got 117 here, 220.07. It looks almost certain that sterling is going to lurch below this 120 level at some point. Interestingly, big move down, sideways. Maybe we'll get another lurch down this week. Resistance being provided here by the lagging line, the cloud on the lagging line on the daily chart. So it's bearish, bearish, bearish. Sterling still looking pretty bad against the US dollar. If we take a look at it against the euro, we're seeing the euro strengthening here significantly against sterling. So again, that's just showing the weakness really showing up in the last few days. So sterling having a bad time of it at the moment. And if we look at the Swiss franc, we're seeing it again down to 123. So we're seeing more renewed weakness there. And against the Australian dollar, we were as high as 170. We're in the 170s. We're back into the mid 160s now. So sterling just having a really bad run here and turning down against the dollar. So just a proxy for sterling falling pretty much everywhere. If we take a look at US markets, we start with the S&P 500 index, remembering this is our long, medium and short-term view. So we're bullish on all three time horizons. We have actually just pulled back very slightly at the end of trading yesterday on the S&P 500 index, but realistically we've got upside targets now and activated as much as 8% in the short term and 20% in the medium to long term. So it really is looking pretty strong for the US market now, getting off to a very good start for 2017. And if we look at the Nasdaq, that's even stronger still. Whilst the S&P was down by 1/3% last night, the Nasdaq was actually up by 1/3%. So we're seeing tech really coming back into the fray, bullish on all three time horizons. Upside targets of about just under 3%, and some very big upside targets as much as 20% in the long term as well. So really quite key there. And we're just seeing this rotation from the sort of the broader indices like the S&P 500 and the Russell 2000, which has had a very strong performance. It was down 0.75% yesterday, whilst the Nasdaq was rallying, and so we're just seeing that turning into negative territory. Remembering that small caps in the US have had a great run, the 2000 shares. So we're just seeing that coming away. Can we get close on the Dow Jones? Well, we just can't get above this 20,000 level. And last night we pulled back away below the 19,900 level. So it's just not happening right now. But it seems still a formality that we are going to break 20,000. The market's still looking pretty strong. Futures down slightly on the S&P 500, up very slightly on the Nasdaq. So again, the tech just showing slight outperformance there. So that's pretty key too. Looking at the FTSE before we open in London this morning, bullish on all three time frames again, managed to go up again yesterday. We're at 7,230, just starting to hit new all-time highs all the time. So the UK market looking stronger and stronger. Of course, weaker sterling having an impact on the blue chips international earnings, which is driving a lot of that rise in the blue chip stocks. But even the mid caps are rising very strongly at the moment. We've got a 4% upside here on the mid caps in the short term, 7% in the medium term, and that 4% is really showing through on the long-term charts as well. So it really is a case of UK equities really now just starting to run and make new highs, looking like a good year ahead. The German index has really gone sideways for most of the new year, so it hasn't been running as much, but it really did have this powerful breakout in December. So it's just not. It's just slowing down after that. But again, we're bullish on all three time frames, so that's really significant. Looking at the Hang Seng, recovering here in the short term, so we're above here. We've got a 4% upside, hitting some resistance though on the medium and long term charts. So don't be surprised to see that is short-lived. And if we look at the Sensex index, we see here as well that we are just at the moment in the strong sort of phase here, although we're the medium term, we've still got more to do. The Australian market has had an amazing run so far this year. It's been up every day, but today for the first time we've pulled back a bit, so we've just retraced here. We see that showing up on the 60-minute point and figure chart, but the medium term trends, all the trends here are bullish, and really it's not made massive differences here to the short term trend even. All these targets still in train, so way too early to call a short term top in that market. Looking over to crude oil, Brent crude up very slightly today, up $55. We're just sitting at, we are bearish on the short term below the cloud, so that is a little bit of a concern, but really these long and medium term charts we expect to dominate this week. We expect to be just a small counter trend move. No clear short term downside targets to speak of. We do have one on the WTI chart of 9% downside, but again, we've got these longer term pictures here, so for the moment it's just too hard to call. Keep an eye on the 1 minute charts if you're trading crude, especially the 1 minute point and figure targets for any changes. Nat gas, we're just really touching this, getting back towards this $3 level, finding some support hopefully on this cloud on the daily chart, but we're still bearish below the cloud. We need a move really above 330 to be convincing that we're back into a short-term uptrend, so just need to keep an eye on that as well. Taking a look at precious metals, we've got really gold has really continued to run. It's just edging up every day, making new intraday highs. We're just seeing here all the time. We're just in this recovery phase. Hopefully we're getting something like we saw at the beginning of last year. Maybe we are finding support on the cloud. We've got this upside target to 1192. That's now less than 1% away, so but it's been there for quite a long time, and that's the target we're playing for. So gold seems to be just finding a floor and building a base. Just keep an eye on this short-term chart for any immediate downturn. Taking a look at Treasury yields in the US, the 10-year Treasury yield is 2.36%. So it's about down 2% this morning. So we're just seeing here we are getting a bit of a retracement, but nothing major. Taking a look at our tech bellwethers, Apple had a strong day the day before, up another 1% overnight. So we're really just seeing this dollar by dollar increase here. We've got a 4% upside in the short term. All the charts here now bullish on Apple, so that's really looking quite strong. And if we look at Google or Alphabet as is, we see here very small change on the day yesterday, but again, lots of upside targets to play for. This is very much the theme for tech at the moment. Taking a look at Amazon, not much of a change there, just holding the gains that we saw, and we saw some pretty big gains in recent sessions, so that's still looking pretty good. Microsoft, of course, is a Dow Jones constituent as well, so always a good bellwether to keep an eye on. And Microsoft has been breaking to new all-time highs, taking out the 2000 high recently, so that's been quite bullish. Just a bit below the cloud at the moment, so there is a little bit of bearishness creeping in the short term, but to be honest, we've got some pretty good upside targets here to play for on the medium to long-term charts. And then last of all, Facebook was up another 1.2% last night in the US, and so we're seeing really that strength just continuing once we've bounced off that support level of 115. So we've risen by $9 just in the last few 4 days. So really quite big moves there, several percent. So Facebook starting to recover, back through the cloud on the daily, but not on the lagging line yet, but on the price. But it looks like we're going to run and make new highs again. So that's looking pretty good too. That's it for today. Until tomorrow, happy charting. See you then.